Hello everyone, welcome to the webinar. We're just letting people come in and we'll get started shortly.
How warm is it with you, Dan? Are you in a warm place?
I'm in an air-conditioned room, so I'm good.
Same.
Are you?
Yes, same.
Hence why I've got a hoodie on.
Yeah, exactly, in this blistering heat. I hope everyone else is suitably air-conned as well, or watching outside in the sun.
Hi everyone, welcome to the webinar. We're just going to give it another couple of seconds, just let everybody in. Cool. Right, let's get started. Hello, welcome everyone to this Celsius Bankruptcy webinar. This is all focused on capitalizing your tax loss as a result of the bankruptcy. This is about tax and it is a very hot day. So we're aiming to get through the content in about 20 to 30 minutes. And then we've got a good section there basically to answer your questions. So if you have any questions as we're talking, please feel free to put those in the chat. And Sam will be picking those up as we go through the webinar. For those of you that don't know me, I'm Dan. I'm co-founder and CEO of Recap. We have a crypto tax calculation service, and we solve a few things. Number one, we connect all the places where you buy, sell, or hold crypto. Because we can then grab all of your transaction history, we can then calculate your capital gains tax or income tax position. From there, you can download reports and upload them to your self-assessment return. Or if you don't want to do that, you can loop in your accountant to your Recap account and they can do it for you. So I think we can all agree that everybody that's been caught up in the Celsius bankruptcy, they've suffered some kind of economic loss. Everyone has got out way less than what they put in, including myself. I feel everybody's pain because I've been caught up in this process myself. So we've kind of I've been personally motivated as well as through Recap to find the tax position on this matter with the goal of baking that into the Recap product. So we've worked very closely with Crypto UK and the tax working group and Ben and his team at Anderson in order to determine the tax position when it comes to Celsius. So you can all get your hopefully juicy tax losses. Over to you, Ben.
Thanks, Dan. Hello, everyone. I'm Ben, and per Dan's intro, I'm a partner at Anderson LLP. We're a tax advisory and accountancy firm. Myself and my fellow partner Zoe White head up the crypto accounting and tax advisory team. We've got a dedicated team, and we only help people within this industry, both domestically and internationally as well. My role within that is to oversee all the domestic aspects of UK individuals and UK business when it comes to their accounting and tax needs. So deal with a lot of individuals requiring self-assessment returns. That involves a lot of data, a lot of going through crypto transactions to understand the story and understand what's been going on to ensure that the tax position is correct. Hence my place on this webinar today to speak about everything Celsius. So yeah, thank you, Dan. Oh, Dan, I can't hear you.
Thanks for joining us, Ben.
Thanks.
I will repeat myself. So we've got a really quick agenda to go through. Before we get started, I do need to say that I am not authorized to give tax advice or financial advice. This is an educational only webinar, and we do advocate that you speak to your own tax advisors or accountants when it comes to filing your returns. We've also done a lot of work to determine the tax position. We've also worked closely with Ben. We've also instructed tax barristers. But that necessarily doesn't mean that our approach is 100% correct, and there could be other approaches. We're working in a very grey area of tax here. So first off, we're going to go through the tax position that Ben's going to take us through, and then going to jump into a live demo of Recap and how we've baked that tax position into the software. We've got a quick summary and just some pointers basically on what you need to consider when filing your return. And then we're straight through into that Q&A so you can get your questions answered. So Ben, over to you.
Thanks, Dan. Yes, as you've stated there, nothing I'm about to say, I'm afraid, can be construed as tax advice. And as Dan has already mentioned, yes, there's a lot of uncertainty in this area. And what we're sort of discussing here is a position with regards to understanding the nature of what has happened and how that affects the tax position thereon. So one of the things that we need to consider first of all is this concept of beneficial ownership. I'm sure some people in the audience may be familiar with this, some people may not be. But this is in respect of who receives the benefit from an asset. This is different from understanding of legal ownership. And whilst the two usually go together, of course, there are instances in which these can be split. That's particularly relevant when we are considering the nature of events that unfold with regards to Celsius and effectively depositing tokens and crypto assets on the platform. And as a result, then we need to consider actually during that point, has beneficial ownership been lost? Now, the reason that this becomes important is because it's the moment at which we lose our beneficial ownership that's important for tax purposes. That is no longer ours, and we've made a disposal. And the reason that's important is because in order to get the timings right when it comes to those disposals and any inherent losses that may arise as a result of transactions, we need to understand the correct dates and the correct taxes and tax points at which these happen. Now, it would be quite a simple position to think, well, I held some crypto assets, I deposited them onto Celsius, and unfortunately I was no longer to access them as a result of the bankruptcy proceedings. So I will claim for a loss on those assets. For tax purposes, crypto assets are pooled. We have a set of rules called Section 104 pooling that pools the assets together, like shares. And the difficulty with claiming a negligible value claim on those assets is that you can only do that when the entire pool has been depleted. Now, this means that if I owned 4 Bitcoin, for example, in my own personal wallet, and I happen to put 2 of those onto Celsius, the fact that I am no longer able to access those 2 Bitcoins on Celsius prohibits me from surrendering a negligible value claim in my self-assessment to claim for that loss, because I still have 2 Bitcoins that are in the pool. My entire asset pool has not been depleted. Again, these pools were sort of designed, the rules around these pools were designed to capture the taxation of shares, to establish an average base cost when it comes to disposing shares. And typically, if I have shares and they become a negligible value, all those shares will be of negligible value. So that's one of the difficulties that we have in this instance. So going back to this concept of beneficial ownership, and sorry if you already look like the person depicted in this picture in there, just holding their head and thinking, good Lord, it's a warm Wednesday afternoon and I'm listening to this tax advisor. Celsius changed their terms and conditions. I think it was in April 2022, version 8. And in those terms and conditions, it was quite clear cut that effectively there may have been a transfer of beneficial ownership at that point in time, because those terms and conditions clearly stated that actually the rights to those assets became Celsius's. Now, depending on what platform you might have been using, whether that was the lending side that the platform offered, you may have had an earlier disposal date, subject to the HMRC DeFi rules, but the date in April would indicate a loss of beneficial ownership, which is one of the first tax points that we need to consider. At that point, effectively, what has happened is we've placed assets onto Celsius, and in return for those, we've received a right to receive those assets back from Celsius. It's called a chose in action. and we therefore carry that right at the value of the assets that we disposed onto Celsius. Now, when Celsius entered bankruptcy proceedings later on that year in July, effectively that right to receive those assets then becomes worthless. That right to receive them no longer has any value. And it's upon that right and that right becoming of negligible value that we're able to make that negligible value claim. The complication that this causes is, one, this has happened in a tax year that's already been closed off, 22-23. The filing date for that was the 31st of January 2024. So we are looking at amending a historic filing position as a result of this understanding. But the disposal of assets onto the platform may well give rise to gains or losses at that point in time that have otherwise not yet been considered. And sorry, I'm not in control of the slides. Dan, can we scoot forward a slide? Right. So I've just been monologuing at you all, apologies, for the last 5 or 6 minutes. And this probably puts it into a much better perspective to consider. So on the 15th of April, we have the updates to the terms of service. And that's when we receive a contractual right to get the asset back. On the 13th of June, transfers and withdrawals were paused, which could be a potential beneficial ownership trigger if we're discounting the 15th of April terms of service. But on the 13th of July 2022, that's when they entered Chapter 11 bankruptcy, and we can no longer reclaim any assets from Celsius. Thus, the contractual right to receive anything back from Celsius became of negligible value. Of course, in this year, the 31st of January, Celsius exited bankruptcy and started making distributions to creditors. Anything that's received as a result of that is effectively chargeable to capital gains in full as a result of proceeds being received from the bankruptcy. So in order to maximize our losses, we need to really understand the position when we lost beneficial ownership of our tokens, the negligible value claim to claim for those losses, and then we've got a gain in 2024 on anything that we may have received. And all of those tax points then needed to be considered in the relevant tax years in order to get that tax position correct. Is there a further slide for me, Dan? Or are we on to, sorry, I can't remember what comes next. So here we go. So here's, oh, sorry, you were saying something. You're muted.
Sorry, I'm just a bit slow going to the next slide.
No, it's okay. I think I'm over speaking on the slides, so apologies, everyone. So once again, we're just taking, this is just an example of the prior slide where we've got that timeline and now we're sort of putting that into perspective. I'm more of a visual person in any case. So here we go. We've got an example scenario where we deposited a Bitcoin onto the Celsius platform. We've then got to consider these dates as points of potential gains or losses. And it may well be that if you've been submitting your self-assessments to date, these may not have been considered by any software that you are using, or whether you analyze these yourselves correctly for the purposes of your UK tax position. And obviously, we'd like to maximize the losses that we are entitled to either offset against the year in which they incurred or to carry them forward against the future gains that may well be carried forward into the 23-24 tax year against any gains as a result of receipts from Celsius as part of the bankruptcy. I think that's possibly me done on the tax side. And Dan's now going to show us what he's built in recap to effectively help everybody with this difficulty.
Hi, Ben. Thanks for that. So I'm just going to set the demo. Just bear with me a second while I transition to my screen. Okay, hopefully you should all be able to see my screen. Okay, so much of what we've been working on at Recap is how we bring the tax position that Ben's uncovered and how we bake that into the Recap platform. So what we have here is a Celsius account in a state prior to the bankruptcy. So in this case, this particular customer had over 300 grand's worth of assets on the Celsius platform. And if we look at their asset balances, they had 6 Bitcoins on there, not much of anything else really. And what we're going to do is we're going to go through our new bankruptcy options, which basically take into consideration all of the tax points that Ben's been through, and then the exchange of all of the assets for the relevant contractual rights to get your tax write-off. So if we go to the settings page, you can now see this new option of apply bankruptcy rules. And again, this is where I'll be really heavy with the disclaimers. We don't take any responsibility for these settings. This is on you to basically go through the different parameters involved in this. And you also need to agree our disclaimer at the bottom. But what the bankruptcy rules enable you to do is to set the beneficial ownership transfer date. So the key date that Ben was kind of talking about was version 8 of the terms of service. That's when Celsius explicitly said in their terms of service that they hold all right and title to the assets that you deposit on the platform. So that could be a giant signal that you have lost beneficial ownership. So if you were to set the same date as the terms of service, that was 15th of the 4th, 2022. Some other people might argue that you actually lost beneficial ownership later on in the bankruptcy saga. You might have lost it actually on the petition date of the bankruptcy. Other people are arguing that they lost beneficial ownership earlier on than that. And other terms of service have signaled that there is a loss of beneficial ownership. Again, it's down to you to determine that date. The next parameter is the write-off date. So once we've considered the beneficial ownership date, the application will exchange your assets for a contractual right. And on the write-off date, we will basically create a negligible value claim for those assets. So the write-off date is the date when you think the assets or the rights that you held on the platform went to zero. And we think the date for this that's probably most affected is 14th of the 7th, 2022. So this is when Celsius actually filed for Chapter 11 bankruptcy. So this is when you effectively have no right and title to your contractual rights, and it's when the Chapter 11 process overtook the entire business, and your contractual relationship with Celsius changed quite dramatically. The next thing we need to consider is loans. So with Celsius, there were probably 3 or 4 different product lines. Celsius had an earn account, a custody account, and loan accounts. Some of those loan accounts were structured as sale and repurchase agreements. So you need to basically dig through any kind of terms of service that you had to basically understand what your loan position was. And then you need to determine whether or not you lost beneficial ownership on the transfer date. So that's the same date that the terms of service were changed. Or if you lost beneficial ownership of your loan collateral as soon as you deposited it onto the platform. What we're going to do in this scenario is we're either immediately going to dispose of your collateral on deposit for a right, or we're going to do it on the same beneficial ownership transfer date. So they're the potential tax options for that. The next thing I'm going to walk through is the distributions. So if you are in the UK, the vast majority of you will have received your bankruptcy distributions through Coinbase. And what you need to do is you need to go through your Coinbase account. You need to look at all deposits to your Coinbase account and enter those into the Recap platform. You also need to enter in the sterling valuation of those assets. And we're currently hard coding these to the value that was decided on the bankruptcy effective date. So if you disagree with those valuations, you can amend them in here as well. And you may have also had a distribution of shares, and this will have been paid into a brokerage account. And you need to enter this information here as well. And then finally, you may have paid a clawback settlement. And what we think within the tax situation regarding settlements is that when you pay that settlement, that is a cost associated with receiving your bankruptcy distributions. So the settlement basically held back your distributions until you settled. So this will be considered as an allowable cost when you enter in your clawback. So finally, when you've done all of that and you've accepted our disclaimer, you can see immediately the Celsius account has now gone to zero. We look at the dashboard, I have 0 Bitcoin, 0 Ethereum, but what we do have is a series of writes in here as well that we're also writing off. We go to the activity page, and we look at the dates that we mentioned. So we mentioned 15th of the 4th, 22 as the beneficial ownership transfer date. So you can see here on that date, when the user had 6 Bitcoins on the exchange, they then were disposed and you acquired a Bitcoin right. And if we look at the tax implications of this particular customer has realized a huge taxable gain because there was a tax disposal. However, when we go up to the petition date, July 14th, 22, and we've then written off the Bitcoin rights effectively for zero. So we've managed to capitalize a loss there. And then finally, when we have distributions coming in, these are treated as taxable as disposals at the time of receipt. So you can see here that we've got some gains as a result of the distributions coming in to the account. We then also have some withdrawals. So what we're doing here is we're saying the Celsius bankruptcy is finished. Those assets that you received as distributions have been withdrawn from the bankruptcy distribution process and then sent to your Coinbase account, which then balances your Celsius account out. And then we can now archive the Celsius account and hopefully not have to deal with it again, perhaps until you've received more distributions in the future, in which case you would come back in here. And if you do receive any more distributions in the future, you would add them in here. Finally, I'm just going to go through what the tax reports look like. So you can see here where we basically turned the bankruptcy options on, and we're talking like a large amount of assets that were associated with a Celsius account, but you can see that the actual tax position is quite modest. But the one thing that is potentially quite irritating is that you are generating capital gains as a result of receiving your distributions. But if we look down at the 2022 tax year, we have a look at the chargeable gains report. You can see here, this is where we're generating the gain from disposing of the Bitcoin for the rights. And then you can see at the bottom, the collateral rights being disposed for zero and realizing a tax loss. And if I go to the tax year where we receive distributions, if I actually click the right link, we now have a section in the tax reports that basically documents the bankruptcy distributions. So we're being clear to HMRC of exactly what we're receiving, the value of those receipts, and these are treated as chargeable gains. So that's effectively what we've built at Recap. We're hoping for the vast majority of people, this will actually generate tax losses. There is a chance that people, based on timing and the volatility of the market, some people could actually experience a taxable gain, just to make that clear. But in the vast majority of situations, people should be able to get some loss relief somewhere with these new features. Now I'm going to stop sharing. Welcome back, Ben.
Hey. I see we've got some questions.
And we've got a final summary. So you first need to consider when disposals have occurred, and that could be version 8 of the terms of service. Certainly the tax advisors that we've been speaking to, they think that version 8 of the terms of service is pretty solid. It's kind of very difficult to dispute. Any rights of action that represent crypto held on Celsius can probably be written off as a negligible value claim. So where I showed you the assets going to zero on the petition date, you do get a tax report that you can generate out of Recap, but you probably also need to file a negligible value claim as well on your return, if I'm not mistaken, Ben. Distributions are taxed as disposals at the time of receipt. So a lot of people will be thinking, well, this is just a return of my assets. Why is it taxable? But that's actually not the case. This is a separate distribution, and it's capital derived from your position in the bankruptcy. Your tax figures are likely to change from the accounting year you first interacted with Celsius. So again, most people with Celsius, you simply thought that you would put in a deposit of Bitcoin onto the exchange, you were earning income, you owned your assets. As we've just gone through, that's probably not the case. And this is going to probably change a lot of your prior filing positions. And finally, you can run the calculations through Recap, get your figures, and it's very easy for you to loop in your advisor into Recap to get that second view and second opinion. And we kind of advise that everybody uses an accountant in this situation because we're dealing with a very complex area of crypto taxes.
Agreed.
So that's the end of the presentation. We only did it in 30 minutes, so you should all be awake. And Sam is going to field some questions. So I'm just going to bring you up to the stage, Sam.
Yeah, I think we're about awake. You hear me there? Yeah.
I can hear you, yeah.
Yeah, so we have got plenty of questions. I think we'll start on the latest one from Adam. Can you get loss relief retrospectively?
So the loss relief that you would get would come from when I was speaking earlier on about the timing of the tax disposals being relevant for different tax years. So where you're talking about loss relief retrospectively, yes, if those disposals that happened in 2022-23 actually do give rise to a loss, what you need to do in order to claim those losses is effectively amend the previous year's return, which you will still have time for, and you claim the losses through that return. Now, if you ended up in an overall gain position in your previous year, those losses would offset those gains. If you had losses rolled forward, then they would offset future gains that you may have in 23, 24. So that's effectively how you're able to make sure that you're maximizing any losses from those transactions in either period.
Awesome.
Okay. And I have another one. So from Alex, so referring to the shares, Alex is asking how the shares have been valued. They thought there was a document noting that they were $20 per share. Just want to check if we're using that or if it's another value.
So I believe that the bankruptcy resolution document that set out the distributions, they valued them at $20 a share. And that was based on the valuation of the assets within this new Celsius spin-out company. Many have kind of challenged that valuation because it's private equity, right? This is not equity that's listed on any kind of exchange yet. There's no kind of price discovery. So we've picked up that $20 a share valuation out of that document, and that's the default in recap. But if you disagree with that, you could change that.
Okay, so it's editable within recap. So what we're saying.
Yeah.
There you go, Alex. And Anne had a couple of questions as well. So I think you should be able to see them on the screen. Is it possible to simplify as follows? First loss, use the dollar valuations in the bankruptcy proceedings as my disposal price to generate a loss. Second loss, Bitcoin, Ethereum, and shares recovery equivalent to approximately 75% recovery. Ben, you're smiling. So.
Sorry, Anne. If anything goes dead inside, my face just starts smiling. So, no, not at all. Anne, thanks for the question. So, I mean, yes, that's a simplistic overview of effectively the nature of the transactions, right, where we would be looking at netting them off. I think there's a question there as to what position that might give and whether, if your tax returns were looked into and should HMRC take a particular stance as to when a disposal may have occurred. Of course, if a disposal in 22-23 as a result of losing beneficial ownership of tokens when placing off the platform arises in a gain, I'm sure you would be unsurprised to hear that they would seek to ensure that that was a taxable event that happened in that year, and any underpayment of tax they'd obviously look to recover plus interest. So whilst what we are talking about are the timings and the differences here, and really how the events of what transpired affect the individual tax elements, and obviously there is a net position within all of that from a tax position where we do like to be quite particular to ensure that we get things right and we can explain why we got them right. That's why we've sort of come up amongst other accountants with this position in terms of the best way forward.
Yeah.
From what I've learned, Ben, there's no way to simplify things when it comes to crypto tax, let alone being trapped in a US bankruptcy position.
No.
I mean, we've learned a lot over the last 6 months, and we've had a lot of customers come to us and just say, surely it's just this simple calculation, but it's like we're talking about things that span tax years, things that span the volatility of the market, and then your only option really to get any kind of loss relief is a negligible value claim. And the question then comes back down to your presentation, right, about the tax position that you can only claim a negligible value claim on something that you've completely disposed of.
Yeah.
So this is why we've gone down this kind of, it feels really far-fetched, but this kind of approach of generating rights associated with the exchange and negligible value claiming those rights.
Yeah.
Okay. Yeah. On the mention of that and everything that the past 6 months, we did have another question asking if we have received any information from HMRC. Do they understand what's happened? Have they given us any guidance, basically? And I think the answer is no, basically.
So we haven't received any specific guidance when it comes to these instances. What we have presented today is based on our understanding, not only of tax legislation, as well as the HMRC guidance that has been provided with us to date, which gives an indication of the way they are likely to seek to understand these events and how those would be taxed. I think it's most likely, if not highly probable, if those aren't the same things, that HMRC are aware of what has happened. And I guess, unfortunately, only time will tell how much they will choose to look at the detail of what's happened for the individuals that are reporting as a result of these events having happened to them. So to try and simplify that, because that was a bit waffly, yes, I think HMRC are aware of this. No, we don't have any specific guidance as to how they might understand these transactions, which is why this is what we believe to be the correct way of reporting, and would encourage anyone who's making disclosures of this on their self-assessment tax returns, along with their advisors, to be quite full and frank in sort of the white space notices on their returns, to actually be forthcoming in the position that they have adopted, just to sort of belt and brace the position.
Okay.
Yeah, sure. I would follow up that as well, is that HMRC are probably never going to give us guidance on this, certainly not anytime soon. Crypto UK did write to HMRC relating to this matter. We didn't have anything specific come back. We have also engaged HMRC on the approach. Again, nothing specific came back in terms of tax advice or a particular, statement of work, if you like. I don't think we're actually ever going to get that. One thing I would say is that we've worked really closely with the best of the best to make sure that this is solid. And that includes the entire team at the Crypto UK working tax group. We've got a couple on the channel. Hi, Alex. There's a few others in there as well. So this isn't just something that we've dreamed up or we've kind of spent a little bit of money on to try and assess the situation. We've spent a lot of time and resources making sure this is as watertight as possible. But ultimately, I cannot say this is concrete. You always still have to speak to your tax advisor. And I would always advocate working with your tax advisor on the specific matter.
Yeah, definitely tax advisor. So kind of following on from that as well, there's obviously a lot of other bankruptcies. We've got FTX. Will we be able to use this feature, or will there be, can we apply these features to other exchanges like that?
The short answer is not yet. So we're pretty familiar with the Celsius position. As I mentioned, I've been kind of caught up in it. So I've been following all the events around it. I am less in tune with the FTX side of things, but I do believe it will be a similar approach when we start to get some clarity from, especially on distributions from FTX.
Cool. And another question from Tom, which I'm just trying to find. Do I need to add anything else to my tax return, or will just the recap tax reports be enough once I've used the tool?
Still need to file a neg value claim, if I'm right, Ben.
Yeah, so the negligible value claim is something that you need to put into your return. The recap tax reports will be the supporting evidence of what has happened, but the negligible value claim is what you will need to put into your return in order to claim the loss.
Okay. And I think that's about all the questions. And if anybody's got any more questions, or if there's any that I've missed. Ryan asking, if HMR views disposals differently, can I pay in Cell token? You let us know.
I do see that Cell token has a little bit of value. Cool. Is there any other questions in there? There's one for, did we answer Sean Hill's question?
Sean Hill. Oh, sorry, I've missed that one. When receiving a distribution from the bankruptcy, would this not be treated as a proceeds received on the original disposal? In which case you would need to amend the loss position reported previously. And also, if an amount is received, could HMRC argue that a negligible value claim is not valid?
So I think this goes back to what we are saying has negligible value. So arguably, when you've lost your tokens, you've got that right, which is a very specific right. And as we saw in recap, we're sort of creating a new right there. That is what becomes of negligible value. Now, don't get me wrong. I can't say it. I've been speaking about this for ages and I still can't say the word negligible. I'm sorry, everyone. I'm post-COVID and my brain is not functioning with my mouth properly. A negligible value claim can be challenged by HMRC on anything, but fundamentally where we've got this right to receive assets, which we are then incapable of doing so as a result of the bankruptcy proceedings, I think it would be a hard argument to claim that that right no longer has any value associated with it, because the proceeds that we would be receiving are effectively at that time unknown. At that point, effectively, what we're doing is exchanging the right to receive those assets for a separate right to receive proceeds from the bankruptcy. And that is why, where you are, your suggestion of treating the proceeds as being received from the original disposal is actually a separate right that you're receiving those proceeds from, which is why those are chargeable in full. I have no idea if that made sense. Sean, if that didn't, please leave a comment. hopefully that answer that question.
Yeah, if anybody has got any more questions, then just let us know, and we will follow up.
That made sense to me, Ben. Didn't you have a question, Ben, about migrating data?
I did. So obviously, hi Dan, big fan. Big fan. So my question was, because we are having to look at historic data, because I'm sure all diligent taxpayers have undertaken their 22-23 returns and they filed it, but what we're saying now is we need to go back and adjust some of those transactions because of what we've been discussing today. Now, if I have been using a different tax calculator to do that, which doesn't have that functionality within it, it's a question around how would we then port that information over to Recap without, if I've been in this space for 6-7 years and I've spent a lot of time getting all that data correct, I guess the concept of moving to different software might seem quite daunting. And obviously we would want to try and minimize any repeated or duplication of work or efforts trying to go through that data and try and get that matching the previous years. So yeah, there was a question there, I guess, around what can we do to make that easier for people looking to move to Recap as a result of these functionalities.
Yeah, sure. I mean, the short answer is, like, crypto tax data is very difficult to be portable between different tax products. People will have, or products will have different tax calculations. So there's always going to be nuances there. So ideally, we would import all of the transactions from the competitor service and the tax would match, right? But that's almost never going to happen because people will have made decisions within the software that are different across the different spectrum of software available. One thing you could do is you could import all of your data into Recap, and let's just say if the tax outcome was looking more favorable than the tax software that you were using, then you could refile, right? And that's an advantage, right? If that's not the case, and you kind of want to start from a particular point in time, maybe you want to start this tax year with Recap, you could import your cost basis. So you could work out what assets you owned at the last tax year and what your cost basis is, and import those into Recap, and then kind of use Recap moving forward. In which case you can set constraints on the exchanges in Recap to only pick transactions up from a certain date. So they're kind of like the only options really at this stage.
Thanks, Dan. It's like we're playing tax software arbitrage.
We are, unfortunately. Yeah. Sam, have we got any more questions?
Not that I can see. I think we've gone through them all.
I've got a quick one for Ben. If anybody wants to find or speak to a tax advisor, how do they get in contact with you?
I can. Oh, can I? I can leave my details on my email address. Find me on LinkedIn. I'm very vocal on LinkedIn. You might even get annoyed about me if you do choose to follow me on LinkedIn, so I apologise for that in advance. But yeah, if you search me on LinkedIn, that's probably one of the best ways to find me, or on our website at Anderson, uk.anderson.com. But thank you very much, Dan.
Awesome. All right. I think we're done. So thank you all for joining us. We'll be sure to follow up with some details. We've got some interesting blogs out at the moment around the Celsius tax nightmare that we'll share out as well. This is recorded, so you will be able to share it around your community, kind of go back through it as well to understand your own tax position. And thank you, everyone.
Thanks all.
Thank you.